Wondering how ETFs can fit into your portfolio? Join us for our Spring into ETF Investing event, a 4-part YouTube series premiering on April 4th, 2025, designed specifically for DIY investors. Check out these exciting weekly events we curated specifically for you, the DIY investor. Our special guest speakers and insightful industry experts will provide the information and education you need to gain confidence and empower you to manage your portfolios. You won't want to miss these weekly specials.
Hey everybody, it's Larry Berman here. Wow, what a week. Our caution to investors in recent weeks and months, manifested this week in what is clearly President Trump's efforts to, rebalance the world and repaper things. And, as the administration is pointing out, it's going to be a bumpy ride, and probably on the other end of it, it's going to be better overall. So I think that's the optimistic way of looking at it. But between here and there, there seems to be a loss of confidence developing in the political spectrum. Typically, when that happens, it comes from people, politicians that are, maybe fearful of their jobs. So midterm elections come up. What is the way out of here? I've heard there were some lawsuits filed on a bipartisan basis to halt this tariff plan, and I'm not a legal expert by any stretch of the imagination in that sense. So the noise factor is high, the uncertainty level is high. VIX spiked to pretty incredible levels this week. Anyways, let's dive into the chart room and see what we learned. The VIX futures curve, seen here with the last year of VIX spikes on a daily closing basis. So we saw back here at the extreme last August, where we had that massive morning gap down and reversal during the day. It took the better part of a month or so, 3 weeks, for volatility to normalize. So, when we got the spike here in December, a week or two. So one would expect that it's going to take several weeks, given the magnitude of elevated volatility levels, for this to normalize. When we look at let's go from weeklies, we'll look at the monthlies here. Spot VIX up to 45. The April futures went out at 32.80. I think shorting it here makes some sense if you, want to think about a hedge or something. But often that could be a very, very bad move. When we look at, the back months, then volatility settles down and is really normalized. The elevated volatility, if we were getting it later on, would be far more disturbing. And typically you don't see a lot of that. In terms of the move here, and in terms of what our Berman's call pro-eyes tactical indicators are telling us, we are now looking at a more material oversold condition for a tradable rally. I don't know if it's going to be Monday or not. And of course, if I knew that, I would have all the money, as I've said many times, and I clearly don't. But the environment now is well set. What we had said, a few weeks ago, a month ago almost, was that this was a dead cat bounce and that we should expect more to come because we hadn't resolved anything around the tariffs. We still haven't resolved anything around the tariffs. We now know a little bit of what it's going to look like, and it's going to be a gunfight. Make no mistake, deals will be cut, things will normalize, and this, like every other sell-off in market history, is a buying opportunity. The only question is at what level, which we don't know yet. But we do know when VIX spikes like this, typically it's going to be very close by. So days away, probably. When we look at a complicating factor, this is actually a very good thing from the perspective of an offset to, the inflation that tariffs would cause. So OPEC Plus today said that they were going to be ramping up production to suppress oil prices because of cheating in Iraq and Kazakhstan. And so we'll see how that plays out. We're getting, political nervousness. President Trump is not going to back down, but maybe the people around him are going to coalesce in terms of strategy, and you're going to probably see over the weekend some kind of deal struck with somebody on something at a very minor level, perhaps, but some bit of good news. If you get nothing on that front for a couple of days, then are we going to go down 5% every day? Well, we could. There is still enough froth in the market. When we look at how the market's priced for earnings. Now, having said that, earnings season starting, we could have a quick look at the S&P 500 estimates for earnings in terms of the year ahead. Way too unrealistic. We said that for a long time. We're now priced on forward estimates, which are going to come down. So let's look at no earnings growth for this year, or maybe a little bit of earnings growth for this year at a 21 multiple. Still not cheap by historical standards, but not the 25 multiple it was only weeks ago. If you look at analyst estimates, strategist estimates, these will come down, no doubt. We saw some revisions this past week prior to the announcements of people taking down their targets. The bullish bull, Ed Yardeni, went from 7,000 down to 6,000, and I think he may have chunked it down twice in the last few weeks in terms of earnings estimates. So the uncertainty around earnings and earnings growth from where we are now certainly has come in considerably. So we can expect some more of that as things quiet down as we get through earnings period. It will be very interesting to see what companies end up saying about the go forward in terms of guidance and the uncertainty around tariffs. So that's going to be very much the next few weeks. But earnings will likely beat, and that should stabilize things. When we look at the employment numbers, Canada, a bit of a mess, presents a real big problem for the Bank of Canada at their next meeting, where their rhetoric has been, okay, it's time for a pause. And now we get this rather ugly employment data. The CPI data is probably not going to downtick enough for a rate cut at the next meeting. When we look at what's priced in to Canada and to the US for the next meeting, Canada's a little better than 50-50 for a rate cut in 2 weeks. Where the Fed in March is still less than certain at this point, far less than certain. But if we extend that out over the next year, you could see 5 rate cuts priced in. U.S. employment situation continues to be okay. We heard Claudia Sahm talk this morning, and she thinks by later this year we'll have a Sahm sell signal on a recession. We would require the unemployment rate to get up to 4.5%. And that really needs to come more from not the change in the labor force participation, but ultimately, decline in jobs. So we're okay so far. Next month, we will start to see more of an impact from government layoffs and resignations around the Doge committee. Here's an ETF we don't look at very much, IEI. This is the 3 to 7 year part of the Treasury curve. So focusing around the 5-year part of the duration curve. And every time in the last few years, we've got up to these levels in terms of pricing in aggressive rate cuts, they get walked back. This time around, I think we probably start to see them, but not at a better clip than what's already priced in, given the uncertainty around inflation. And so good news on the OPEC side for falling commodity prices overall. And I think that's a positive that will be seen coming into the data in the next couple months, maybe equally in offsetting some of the price shocks from tariffs. So that could be a positive. Ultimately, on the Canadian dollar side, on the tariff announcement, we saw Canada excluded initially in Mexico, and then the shock to markets. This isn't over yet for the Canadian dollar, but very likely these extremes where we were pricing in the worst of the worst of the worst probably are the worst that the Canadian dollar is going to get. Obviously, we've got an election here in Canada, and that's to play out at the end of the month. So, more news there, but we really like the idea of hedging foreign market exposure, looking out a couple of years for investors. And then finally, the leadership on the downside, which is the Qs. We talked about the importance of this first retracement and support for both the S&P 500 and NASDAQ. So if the NASDAQ can't hold in and around this week, which there's, clearly more risk to the downside, the NASDAQ 61.8%, which would wipe out the vast majority of the recovery that we saw, in the last year and a half. If we go back to where the market was really fully priced post-COVID, that 400 level is right at the 50%. We went out at 422. It's 4 or 5% lower, folks. So there's a lot of technical support below the market here. I think we're going to start to stabilize. I think people still love the AI story. That hasn't changed. All it's going to take is a little bit of positive commentary coming out of the US, China, and the EU. When is that going to happen? Don't know. Anyways, that's all we have this week. Listen, it's still a cautionary environment, but the opportunities are now on the front burner. So find your favorite oversold things. Get ready to buy them into your portfolios in the days ahead. I know Bill Gross came out and said it's not time yet. And so maybe it isn't for full on if you've been keeping some powder dry, but it's definitely time to start to nibble a little bit at the areas. We made a trade in the sleep at night dividend portfolio this week where we've been very defensive for part of it with ZWU. I talked to Canadian investors on BNN for years about how much I love that. We had a very good rally on the interest rate sensitive stuff on Friday. I unwound my ZWU position that's again been very defensive for us this year, rolled it into covered call banks and covered call tech as a tactical trade where we've been very underweight tech for a long time in that portfolio. This is our first move into that in like a year and a half. Maybe even since the probably going back into 2022. So more to go on that to get a bit more growth into that portfolio. But we've been really battening down the hatches with international exposure and very, very, good protection in the portfolio. So, going to start to unwind that in the next few weeks. Anyways, that's all we have right now. Have a great week, everybody, and start looking for some opportunities.